Good morning, all you magnificent melon heads, and happy Monday. Today is April 10th, 2023. I hope you guys are all well and that you had a magnificent Easter weekend. And now it's Monday, and it's time to get right back into it. And the big story this morning is that banks are starting to tighten their lending. And that is a very bad sign for U.S. companies, namely U.S. zombie companies that are dependent on lending, dependent on easy money and cheap debt in order to sustain cash burning operations. And well, there was already a trend of banks starting to tighten their lending as the Fed was raising interest rates all through 2022. That trend was picking up steam in the first few months of the year. And then when Silicon Valley Bank collapsed, it just went into overdrive. And now we got a report over the weekend that shows that the banks are really starting to restrict their lending. That is going to cause problems in every corner of the economy. Elsewhere, we had a speech by the new head of the Bank of Japan. He is in there today. Hirohiko Kuroda is out. And well, he made a speech that said, not really going to make any big changes to BOJ policy, at least not right now. And that has caused the dollar to strengthen this morning because a lot of people have been expecting this new head, Kazuo Ueda, over at the Bank of Japan, to come in and to start immediately tightening conditions over in Japan. Well, he said today he's probably not going to do that, at least not right away. Now the dollar is rallying, and that is sending stocks sharply lower this morning. With that, we are going to shrink my big melon of a head, and let's see what's going on in markets right now. We've got the S&P is down 30 points, or about 0.75%, sitting at 4,074. The Dow is down 90 points. It was down more than that pre-market. Currently down about 0.25% at 33,395. And the NASDAQ is leading the way lower. We have got the NASDAQ down 124 points, a full percent, at 11,963. Big gap down at the open for tech stocks. And what is going on there? Well, that is most likely has something to do with the U.S. dollar. As I just mentioned, that big speech over at the Bank of Japan with Kazuo Ueda coming in and saying, hey, no changes to yield curve control policy right away at least. And the dollar has been running ever since he gave that speech, which started a few hours ago. Currently up 53 basis points, about 0.5% at 102.62. Looking at the bond market, we've got yields are up pretty much across the board. Only the far long end of the curve is down this morning. We have got the 10-year Treasury yield is up about 1 basis point at 3.39. And the big mover today is the 4-month, not a very liquid one there, but really not a lot going on in the bond market at the moment. Looking at commodities, we have got gold is not liking that stronger dollar right now. With gold is down 1875 or about 1% right now. Still over 2,000, but just barely at 2007.85. Got silver is down about 11 cents right now, or about 0.5% at 24.98, back below 25. WTI crude is down 14 cents or 0.17% at $80.56. And natural gas is up about 14 cents this morning at 2.15, up about 7% over in the natural gas area. But here is the big story this morning, and this is the one I want to talk to you guys about. This is in Bloomberg, dated a couple days ago. U.S. bank lending slumps by the most on record in the final weeks of March. Loans by commercial banks declined by nearly $105 billion, and deposits at U.S. banks have decreased for the 10th straight weeks. So we're still seeing that trend. The deposits are leaving the banks, even though everybody keeps telling us how strong everything is and how safe everything is. People are still pulling their money out. It's slower, but they are still pulling it out. And the banks are going on defense, not wanting to issue more loans, being very careful what risk they take on in this environment. U.S. bank lending contracted by the most on record in the last 2 weeks of March, indicating a tightening of credit conditions in the wake of several high-profile bank collapses that risks damaging the economy. And here's some of the data points. These are pretty rough here. Commercial bank lending dropped by nearly $105 billion in the 2 weeks ended March 29th. That's the most in Federal Reserve data going all the way back to 1973. More than $45 billion decrease in the latest week was primarily due to a drop in loans by small banks. Small banks are vital to the economy, folks. That is most of your real estate loans, most of your car loans are coming from those small banks. The pullback in total lending in the last half of March was broad and included fewer real estate loans as well as commercial and industrial loans. And check out this chart here in Bloomberg that they're showing us. Now, up top here, this is total loans and leases. So this curve doesn't really show you how bad things really are. It doesn't look like much. But look down at the bottom here at the rate of change, this pink line here, And this big precipitous drop, this massive down step right here, this minus 104.7, that is the single biggest drop in U.S. bank lending going all the way back to the beginning of this data series in 1973. So this is bad because we have a lot of companies that are dependent on new debt in order to refinance old debt because their companies don't make that much money. We're just coming out of an end of a decade and a half really of ZIRP or zero interest rate policy, where companies that didn't make that much money could continuously access the debt market in order to stay alive in the hopes of future earnings. As long as the interest rates stayed low, they could perpetually do that. Well, now they can't do that anymore because the interest rates are so high. And besides the higher rates, now the banks just don't want to lend because they watched Silicon Valley and Signature fail. So now the banks aren't making these loans. What do these companies do now that they have to refinance their debt into higher rates? That's if they can get the loan at all. A lot of these companies are going to go under, and that's why a lot of people are bracing for sharply higher unemployment in the remainder of the year. And by the way, we are heading into bank earnings this week, starting on Friday. Wall Street bank earnings under pressure after crisis. This is in Reuters data just this morning. Most Wall Street banks are likely to report lower quarterly earnings and face a dour outlook for the rest of the year, with last month's regional banking crisis and slowing economy expected to hurt profitability. Earnings per share for the 6 biggest U.S. banks are expected to be down about 10% from a year earlier, analysts are estimating, and the banks start reporting on April 14th. So we do have higher interest rates, and typically higher interest rates are good for banks because banks make their money on the differences between what they borrow and what they lend at. Typically, higher interest rates means a higher net interest income or net interest margin for the banks. So they will be seeing higher net interest income from this higher rate environment. But the problem is they're going to have to set aside so much money for loan loss provisions because in these higher rates and with this tightening of lending standards, the banks know people aren't going to be able to pay them back. And so they start taking the hit to earnings ahead of time by setting aside provisions for loan losses. That is going to take a huge chunk out of their earnings, more than offsetting the increase in interest rate income. So keep an eye on that one starting on Friday this week as the banks begin reporting earnings. And across the pond over in Japan, you've got Ueda and Kishida agree. No need to revise the government BOJ accord for now. This is the new head of the Bank of Japan. What is his name? Kazuo Ueda. And he just gave a big speech today. The Bank of Japan's yield curve control and negative interest rates are appropriate amid the current economy, said new Governor Kazuo Ueda, signaling any significant changes to its monetary policy framework may be unlikely for the time being. And that's the operative statement there, that second half of the sentence. There will be no changes to the Bank of Japan's, in my opinion, insane policy of yield curve control, at least not for the time being. Everybody was expecting Ueda to come in and start jacking up rates and to abandon yield curve control policy. Japan needs money to finance increases in defense spending. Yield curve control policy has been a global outlier for a long time. A lot of people, myself included, thought Ueda would come in and on day one start walking back this policy. Of course, then the bank run in the U.S. happened and the crisis happened. So Japan is sitting back right now, and they're going to watch things for a little while. Speaking at his inaugural news conference as governor, Ueda also said he's open to the idea of a policy review from a longer-term standpoint, although he'd like to discuss it with other board members before any decision. So this is largely responsible for this big spike up in the DXY this morning. It's mostly the Japanese yen being devalued. A lot of people were front-running Ueda thinking the yen was about to get stronger, and that was driving the dollar down. Well, this morning people are walking that back just a little bit. And of course, a stronger dollar is not good for U.S. stocks, which are valued in dollars. And I just want to say thank you very much to, let me see if I can find that comment. Where are you hiding? I saw that super chat come through. I see him out of the corner of my eye. There he is. Hey, Nashville Pasta Man. Thank you very much. He says a case of Bud Light for the Mish Man. Mish, is that your beer? Is Bud Light your favorite one? Or I hope we're not going to trigger people with the Bud Light comment there. People are a little passionate about their beer right now. I'm not going to touch that one with a 10-foot pole. But thank you very much, Nashville Pasta Man. I appreciate the super chat and the support of the channel. And while we're on the subject, thank you, Mish, for everything you do for the channel, along with my other Blue Wrenches. You guys are awesome. Love everything you guys do. Thank you so much. Also, thank you to my Patreon supporters for everything you guys do to support the channel. Link down below should you feel so inclined. And hi, Mom. Hi, Dad. I love you guys. Until next time, everybody, live small and dream big.